The robot age is one of the most exciting technology trends of the coming decade. However, investors should remember that humanoid robots and advanced robotics are still an emerging industry. While the potential opportunity is enormous, many of the companies involved today generate most of their revenue from other businesses such as electric vehicles, industrial automation, software, logistics, and manufacturing systems. What makes these companies interesting is not necessarily where their profits come from today, but where investors believe future growth could come from, as robotics becomes increasingly integrated into the global economy. In this video, we'll examine 5 companies helping build the foundations of the robot age and explore where they currently stand from both a business and technical perspective. Let's begin with Tesla. While Tesla is best known for its electric vehicles, the company has become one of the leading names in physical AI through projects such as Optimus and its autonomous driving platform. It's important to note that Tesla's stock is influenced by many factors, including vehicle sales, autonomous driving, and broader market sentiment. However, Optimus remains one of the company's most ambitious long-term growth opportunities and a key reason Tesla is often associated with the future of humanoid robotics. Now let's turn to the chart. Looking at the weekly chart, Tesla continues to trade within a well-defined range. The most important support level sits near the $286 area. This level acted as a major resistance zone for years before finally being broken in November 2024. Aside from a brief breakdown during the broader tariff-driven market correction in March 2025, Tesla has successfully remained above this level. On the upside, the key resistance level remains the $500 area, where the stock reached its most recent high in November 2025. From a technical perspective, this level represents the most important barrier for the stock's next major move. At the moment, Tesla is trading roughly in the middle of the range between support and resistance, and the chart does not yet show a decisive trend in either direction. As a result, investors may prefer to wait for additional confirmation before taking a stronger directional view. A successful breakout above the $500 level would signal renewed momentum and could open the door to new all-time highs. For now, the stock remains trapped between support near $286 and resistance near $500, making those the 2 key levels to watch. Next, let's move to XPeng. XPeng is a Chinese technology company focused on smart electric vehicles, autonomous driving systems, robotaxis, and emerging physical AI applications, including humanoid robotics. Unlike some of the more established companies in this video, XPeng should be viewed as a higher risk and more speculative investment. The company operates in the highly competitive Chinese technology and EV market, where investor sentiment can change rapidly. However, if physical AI and autonomous systems become a major growth industry over the coming decade, XPeng, where investor sentiment can change rapidly. Now let's turn to the chart. Looking at the weekly chart, XPeng remains far below the levels reached during the enthusiasm surrounding its 2021 public listing. Since those early highs, the stock declined roughly 90%, before eventually establishing a long-term bottom near the $6 area. In August 2024, the stock began a powerful recovery, rallying approximately 277% before reaching the $25 level in November 2025. Since then, shares have corrected once again and are now approaching an area that appears technically very interesting. The most important demand zone currently sits between $11 and $13 per share. From a technical perspective, this area may provide support and potentially act as a foundation for a future recovery. If buyers continue to defend this zone and the physical AI narrative continues to strengthen, investors could see the stock move back toward the $25 resistance level. A successful breakout above that level would represent a significant change in the long-term structure and could open the door for a new phase of upside momentum. For now, XPeng remains one of the more speculative names in the robot age theme, but the $11 to $13 area appears to be the key zone to monitor. Next, let's move to Symbotic. Symbotic develops AI-powered warehouse automation systems that help retailers and distributors automate inventory management, logistics, and fulfillment operations. While the company is not building humanoid robots directly, it represents one of the clearest examples of robotics already being deployed at scale in the real world. As labor shortages, efficiency demands, and automation trends continue to accelerate, Symbotic is positioned to benefit from the broader adoption of intelligent robotic systems. Now let's turn to the chart. Like many companies operating in emerging technology sectors, Symbotic remains a relatively volatile stock. Investors should remember that companies tied to robotics and automation often experience large swings in valuation as expectations evolve and the market attempts to price future growth. Looking at the weekly chart, the stock is currently approaching one of the most important technical levels on the chart. The $40 area represents a critical support zone for the current trend. After spending a long period below that level, Symbotic successfully broke above $40 in June 2025, marking a potentially important shift in market sentiment. Following the breakout, shares surged approximately 113%, eventually reaching a high near $90 per share. Since then, the stock has entered a steady correction and has now returned to test the original breakout zone. From a technical perspective, the $35 to $40 region is exactly where investors would like to see demand reappear. As long as buyers continue to defend this area, investors can argue that the longer-term bullish structure remains intact. A successful hold above support could provide the foundation for the next advance, while a decisive break below the zone would raise questions about the strength of the current trend. For now, the $35 to $40 area remains the key support zone to monitor. Next, let's move to ABB. ABB is one of the world's leading industrial automation and robotics companies, providing technologies that help factories, warehouses, and industrial facilities become more efficient and increasingly automated. Unlike some of the more speculative companies in this video, ABB operates an established global business with decades of experience in automation, electrification, and industrial robotics. As industries continue to adopt robotics and intelligent automation systems, ABB is positioned as one of the key infrastructure providers behind the broader robot age trend. Now let's turn to the chart. ABB has demonstrated impressive technical strength over the past several years. In March 2024, the stock successfully broke above the 46.20 level, a major resistance area that had previously capped price advances. Since that breakout, shares have repeatedly returned to test the level, yet buyers have consistently stepped in to defend the zone and maintain the longer-term uptrend. One of the strongest examples occurred in January 2026, when the stock once again approached support before launching a powerful rally of roughly 70%. From a technical perspective, the stock is currently trading within a broad range between approximately 5,800 and 7,800. This range now represents the key battleground between buyers and sellers. A successful breakout above the upper boundary could signal the next phase of the long-term uptrend, potentially supported by continued adoption of robotics, automation, and industrial AI technologies. On the other hand, broader market weakness or negative developments within the sector could push the stock back toward the major support zone near 46.20, which remains the most important long-term accumulation area on the chart. For now, investors should focus on the current trading range while keeping a close eye on the strength of support around 46.20. Finally, let's look at Rockwell Automation. Rockwell Automation provides the software, control systems, and intelligent devices that help modern factories operate with increasing levels of automation. While companies like Tesla focus on building robots, Rockwell focuses on the environment where those robots will eventually work. As factories become more automated and connected, Rockwell is positioned to benefit from the long-term growth of industrial automation and intelligent manufacturing. Now, let's turn to the chart. Rockwell delivered an important technical breakout in October 2025, when the stock finally moved above the $350 level. This area had acted as a major resistance zone for years, repeatedly preventing the stock from reaching new highs. Following the breakout, shares advanced approximately 25% before pulling back to retest the former resistance level. Importantly, buyers successfully defended the area, transforming resistance into support and confirming the breakout. After that successful retest, the stock resumed its advance and climbed another 35%, reaching the $470 region where it trades today. From a technical perspective, the overall structure remains constructive. As long as the broader automation and robotics trends continue to develop, investors can argue that the long-term uptrend remains intact. However, if a broader market correction occurs, the most important level to watch remains the $350 area. That zone now represents the key support level and the defining technical landmark on the chart. For now, Rockwell remains one of the strongest industrial automation names in the robot age ecosystem, with the $350 level serving as the most important price area to monitor. As we've seen throughout this analysis, the robot age is not being built by a single company. Tesla is pushing the vision of humanoid robots and physical AI. XPeng is expanding autonomous mobility and next-generation robotics platforms. Symbotic is already deploying large-scale robotic systems inside modern warehouses. ABB provides the industrial robotics and automation technologies used throughout global manufacturing. And Rockwell Automation supplies the software and intelligent control systems that help modern factories operate more efficiently. Together, these companies represent different layers of the robot age ecosystem. While robotics remains an emerging industry, and many of these companies still generate most of their revenue from other businesses today, investors are increasingly focused on the possibility that intelligent machines and physical AI could become one of the defining economic trends of the coming decade. If you'd like to explore more market themes, industry trends, and stock opportunities, subscribe to NAVIXA for structured market insights.